Banking and NBFI sector, non-banking financial institution sector, has been evolving at a rapid pace. Especially technology coming in, the dynamics are completely different. I think we, from a financial conglomerate's point of view, JXG wanted to explore more on this subject. And to do that, I have invited a very special guest to JXG Spotlight today. Welcome to JXG Spotlight, another exciting episode. I'm your host, Gamika Dilva. The gentleman who's sitting across the table with me is a veteran banker. My memory goes back into 1998 when he was heading. As a fresher, I joined a leading bank in Sri Lanka, private bank, and he was heading one of those main offices in Sri Lanka, in Colombo. And I've seen this personality, and fast forward to 2024, I had the privilege of working with him in two organizations in our group. He's heading the board of directors at First Capital Holdings as well as Jan Shakti Finance. I don't have to read a lot about his profile, a veteran banker. Friends know him as Thea, but we call him Mr. Rajendra Theagarajah. Mr. Theagarajah, welcome to JXG Spotlight, and the spotlight is on you.
Pleasure. Thank you for having me.
Thank you, sir. Before we dive into our subject on the financial sector and the banking sector, you had a very interesting career. When I did my research, a lot of people don't know about that whole background about working at JP Morgan, coming into Indus Bank, etc. But can we go back a little bit more to your childhood? How did all this your journey started?
Childhood, eldest in a family of four. I would say I was a late starter in terms of academia, very much playful in school, probably more out of school than inside school. But that's a very key learning point. It's never too late in life to start. But I think the blossoming started probably after I left A-levels.
Okay.
Got into accounting by accident to please my mother. My actual thrusting was planting.
All right, okay.
But I think in my mother's wisdom, she thought I'll be a disaster. So got into accounting, and then, of course, I completed my exams. And then again, accidentally, got into banking when I finished my MBA after qualifying as a CA. They have what they call the milk rounds in the UK. So the old JP Morgan, Chase Manhattan, gave me an offer, one of three offers I got, which was the least paying of the three offers I got.
Right.
But I picked it for a particular reason, not for banking.
Okay.
It was the excitement of travel.
Wow, okay.
Because the role I initially started, over the first 3 years, I must have done 65% living on a plane, covering 3 continents. So learning at somebody else's expense, global multinational, it was tremendous. But I eventually spent 10 years with them, doing multiple roles before I decided it's time to get back. I've always wanted to come back home. I got this opportunity with Indus West to come back. No particular role relating to any specialty. And then I got bombed out.
Okay.
31st of January 1996 with the central bank bomb. I got bombed out. The bank on a Wednesday morning at 10 o'clock got hit with an RPG. Went into ashes within a couple of hours. Thursday,
you were right
Friday,
in the center.
Right over my head.
Yeah.
Thursday, Friday curfew. But I started the bank on Monday at Colombo 2 at Jinasena Building's rooftop.
Wow.
Without 1 cent cash, I started that. Main learning point was networking, power of friends. An air conditioner here, PABX there, corporate customer who said, I can't give you money, but come and take my 4th floor and do what you can do, not 1 cent cash. But I started the bank. So it taught you resilience to also act on the move.
Absolutely.
And then, of course, after 1 year, the bank decided for country risk sake they want to sell, and HNB bought it. Probably the best decision I made was at that time I had the option of going back to Paris or London, but I decided to remain. And I must say that's when the next 18 years or 16 years, I was able to see Sri Lanka through a complete different pair of eyes and never turned back after that.
Fantastic. Mr. Theagarajah, you also mentioned during our casual chats, you were never a credit person. No, you never, you didn't consider yourself a banker, but no, I think, you're a legendary banker. You've been like, setting up the Sri Lanka Banks Association, Asian Bankers Association. You've been the chairman emeritus, if I read it correctly. How did this career evolve? I know you started in accounting, moved from indices to HNB. How did all this happen?
So if I put it in a nutshell, I think what Chase taught me, I started as an internal auditor,
Okay.
for God's sake. Most people think that's the dump. But actually in a place like Bank of America, Citi, Chase, it's probably the real training ground for leadership because you get a 360-degree view across multiple verticals and you're trained not to take no from however senior person is.
Right. Okay.
And that, I think, to me, if I look back after 40 years, was the biggest take home. The ability to interact, and secondly, interact with people, multiple cultures. So to me, any department or a challenge in a bank was not about credit or payments or IT. It was about given a challenge, given a set of resources, and say get an outcome done. So I compare it to a sausage factory.
Right.
Right. You get something which goes in, and you want a nice sausage coming out, and how do you bake it or how do you do that is within your ability
Right.
to look at productivity, to look at cost structures,
Efficiency. Yeah.
efficiency, and most importantly, how do you get the best out of the group of people who are in that. So I think that people management, the people alignment to me is probably the best USP, I think, for me personally, and that's something I enjoy. So I wouldn't call myself banking, and I actually don't have a banking qualification.
Really?
I got an honorary fellowship by the Institute of Bankers for whatever reason, but no, it's all about people.
Fantastic.
But getting the best out of credit or finance or whatever it is, to have the right professionals around you, motivate them, and I always believe getting a group of people smarter than me
Okay.
around me is not a threat. It is actually a strength if you can motivate them.
Motivate them.
to-
A notion I had, or somebody has told me when I was in my career in banking, if you don't understand treasury or if you don't know credit, you'll never be a CEO of a bank. So you're like, breaking that norm, Mr. Theagaraja.
to-
Mr. Theagaraja, with your people management ability, I personally experienced that. Now you have ventured into the fintech area. How did this transformation happen after your illustrious banking career? You've been in boards as well as now in the startup field as well.
So this started about 8 years ago when I was sort of deciding to taper off active management. You had two guys who came back to Sri Lanka from Vancouver, Sri Lankan origin, came back through another colleague of mine and said, we have a problem. We want to start this particular problem in payments. This is the gap we saw. And we'd like you to validate our hypothesis or critique it. And first it was not about investing, it was to critique it constructively. But over about, I think, 4 or 5 discussions, I realized that they had a sweet spot, and there was actually a gap between the predominantly cash market in this country, and what they were trying to do. So effectively, over maybe the next 2 years, 5 of us who were all CAs and CMAs, who were of the same age group, who knew each other for 40 years before, came back together and said, let's back these 2 guys.
Nice.
And not that we were only advisors, we actually put our rupees and cents into it. So we actually co-invested.
Right.
And during the third year, one of the co-founders on a return flight from Hong Kong actually suffered a heart attack and died at 31.
Oh, I'm sorry.
So the current guy who is acting as the CEO, who was co-CEO, before the body came home, the 5 of us took a decision. We are going to back this guy, and we are going to be behind him, come what may. And I think it's not a straightforward journey. It's not a plain sailing journey. There were plenty of potholes, but I think we stood. And each of the 5 of us who co-invested, brought in a different specialty or a different element of mentorship, which we brought into the table
Right.
and mentored the young team. And only about a year ago, I came in front and officially became the chairman.
Right.
But before that, it was always playing an advisory role. But I must say, if I look back, I probably enjoyed this more than my 3 decades of banking.
Oh, fantastic. I'm sure that journey is like very interesting with a lot of challenges, etc. Mr. Theagarajah, that leads me to the next question. As my opening statement said, the banking and NBFI sector is evolving at a rapid speed. I don't know whether Sri Lanka is riding that wave, but we have to be adapting new technology and changes. How do you see, with your years of experience in banking, now in the fintech area as well, how is this industry evolving in the future?
So industry, I must say it has been, it's obviously a regulated industry predominantly. While we always have this take as to how over-regulated you can be, and is that the right thing, I must say to a great extent the Sri Lanka's financial services ecosystem has withstood the challenges we probably had, probably because of sound regulation. And I will give that credit. Saying that, on the other hand, we are seeing the industry and consumer expectation and competition evolving so rapidly that I think also the biggest challenge is for Reg to also keep pace with the evolving customer expectation.
Absolutely.
So I think the real challenge is, are we going to put the cart before the horse or vice versa? Is Reg going to take a step ahead, or are you going to be
Waiting
follow through? And I think this is going to be an interesting challenge for policymakers. I'm not here to pass judgment on policymakers,
Sure.
but I think it is a rolling stone which keeps on rolling faster and faster every day. Consumer will keep on, their expectation will keep on increasing day by day.
Yeah.
Secondly, with the availability of social media and awareness, Gen Z will keep on getting wiser and smarter.
Absolutely.
And they'll ask for more. The question is whether the conventional financial system will be able to deliver, and if they don't, then okay, who else will cater? And somebody else will cater.
Yeah.
If I give you a simple example, this whole thing of buy now, pay later, it's become very fashionable. It's a big demand. But the convention sometimes says there's a credit risk. How do you manage that?
That's right.
But there are people who have got into the space who are actually building algorithms not based on conventional risk management, but on the way a Gen Z or Gen Y behaves. They track behavior and build
The lifestyle.
algorithms,
Yeah. Okay.
which is quite different. So you are then now seeing somebody challenging the status quo and building on something like that. So there will be a few things like that happening, which is really driven by consumer expectation and demand. The question is, if the traditional financial services industry does not respond, you will then see alternates coming in.
Yeah. And
that is happening around the world.
Around the world, yeah.
It's happening next door in India. It's happening in Singapore. It's happening in Africa in a big way.
Yeah.
So Sri Lanka will have to also see how best they are able to respond to it.
See, some of the research I've seen, Mr. Theagarajah, the Gen Z, who will probably have opportunity to earn out of foreign currency. I mean, they can provide services, and as we speak, Sri Lankans are doing that. And some of these kids doesn't want to even come to a bank. They would need financial advisory on tools to manage their wealth, but they wouldn't want to walk into a traditional bank, fill up a mandate and open an account, etc. So I think, things will evolve. And on the same background, the Basel III compliance will also pose some threats into the capital constraints. How do you see the Sri Lankan banks responding to this?
So capital will definitely be a challenge, but of course today we are really in a sweet spot with the Colombo Stock Exchange performing to exceptional levels of height, and the benchmark keeps on moving every day.
Every day, yeah.
So it currently gives an opportunity for FIs to be able to go into the market and raise capital as and when. But this is probably not going to be available forever. So eventually, while the market itself is now supporting capital creation, to me, I also feel, and I've always been open about this, industry consolidation is also equally important, because if you have too many players chasing a limited market, there is going to be fragmentation.
Yeah.
So I feel, and for another reason, I think Sri Lanka needs to look at this, because if you look at maybe the next 10 years in front of us, there are a few things happening. We can talk about it.
Yeah.
But one thing which the post-Trump thing has brought into the equation is the argument for globalization against localization. And you're now seeing some of the big economies getting back towards pseudo-protectionism as opposed to open globalization. And when that happens, a new phenomenon is, instead of what we used to call offshoring, some of the critical industries are now being what they call reshoring back into their own countries.
Right.
So when that happens, there is going to be a natural need for larger local financial institutions to better understand and support the growth of those critical industries. So it's not really going to be global banks who will do that. It will be the proliferation of strong local banks. And I don't think Sri Lanka is any different to it. Maybe it's from us. The only difference is the size and scale, but the phenomenon will embrace us as well. And that's where I think there is certainly a case to build, not have maybe 15 banks, but to have 3-4 strong anchor banks, well capitalized, to be able to support this phenomena, not for today or tomorrow, but in the next decade.
Absolutely. So I think, you read my mind, and you actually answered my next question also about on the consolidation side of it. Recently, we saw two international banks moving out their operations, and the local banks are strengthening their area on the retail banking side. On the similar side, Mr. Theagaraja, the NBFI sector, the non-banking financial institutions, do you also see some consolidation happening on that ground?
It has to. Of course, when we look at NBFI, I think it still contributes for less than maybe 6 or 7% of the total financial sector asset portfolio. So it's still small. But within that itself, two things are happening. Gone are the days of you having a interest rate margin differential significant enough between banks and NBFIs for NBFIs to only play a pricing game. Because now with the type of domestic rupee interest rate regime settling into single digit, that's become a thing of the past.
Absolutely.
So obviously competing on cost efficiency, productivity and other things are equally important. And there is only a limited amount of capital available to support such fragmentation. So naturally, consolidation has to also embrace the NBFI sector as well.
Because even on the asset portfolios, if you look at it, it's skewed towards the top 3-5 players heavily.
Absolutely.
And it's a fragmented market thereafter. With this being said, I think Sri Lanka traditionally, especially on the NBFI sector, we've been after deposits and asset, lending, deposits and lending, pawning, leasing, etc. With machine learning coming in, AI technology coming in, I haven't seen the Sri Lankan market taking that leap forward. I mean, there are NBFIs who have moved into the digital space, but do you think we are moving at this right pace, or we can do more?
I think what's probably not fair to do is to compare the Sri Lankan conversation with neighbors or maybe markets of similar size, but with a different DNA. I think we have our own DNA, and you've got to understand we came out through COVID, and then we came out through a serious financial setback in 2022. So there is obviously a period of economic stabilization as a nation as a whole, and we've got to play within that space. But saying that, I think we can't be oblivious to the fact that there are a few things happening. Technology is changing, the pace of digital acceleration is taking.
Yeah.
In addition to machine learning, you're having things like open banking, API-led
API.
banking coming in. Along with that, there are challenges like cybersecurity, which is coming. So I think the question is, do you see that as a challenge or do you see that as an opportunity?
Yeah.
I personally think that FI should look at it as an opportunity. And there's no way will any FI be able to crack all these individually on their own. And I think this is the real opportunity to look at fintechs not as a threat, but as a competitive tool and collaborate rather than saying no, that they compete. And the reason behind that is fintechs, while they may not be, and it will not be in their DNA to muscle conventional deposits and lend, their agility to bring in technology, embrace technology, and really bring in proof of concepts.
Yeah.
If that is there, the conventional regulated FIs should embrace few of these as a part of their overall product portfolio, rather than them try to go and do the same thing.
On their own. Yeah. And I think, having said that, we can't completely rule out the telco, the role of telco in this. I think you have accessibility to 100% in terms of your population, the data, etc. is there.
Absolutely.
So that being said, I mean, you have advised, you have been behind some of the startups, even actively doing some of those work. Do you think Sri Lanka has enough regulatory framework or support systems to startups to come up, or especially on the fintech area?
So at this moment in time, there appears to, I think there is a framework available with the Central Bank of Sri Lanka, which is the regulatory sandbox which they created, I think, close to maybe a decade ago, which I think was a welcome thing at that time, so that you were encouraging startups who wanted to get into financial services to test their proof of concept in a controlled environment before that is let wild into the consumer.
Right.
That is fine. And maybe initially when the sandbox was set up, the mandate or the expectation was any startup has to bring an idea through a licensed bank into the sandbox.
Right, okay.
Which I think also may have made sense at that time, the way industry was, to make sure that it was caution.
Yeah.
But I also see, on the other hand, a downside wherever there are registered or licensed banks who perhaps see a smart idea as a threat to their own existence, then the taking it somewhere else is going to be an issue. And I'm mindful that many regulators in the region would have started like this, but the regulators of some of the larger economies in the region have moved a couple of steps ahead now and taken away the need for startups to bring an idea through a licensed bank into their respective sandboxes. And that's actually happening in some other more developed jurisdictions. So maybe it's time for us also to start to look at something like that.
Absolutely.
If not, we won't, the pace will...
It won't go at the same pace that we would like it to go. Mr. Theagarajah, having said that, next 3 to 5 years, I'll have the question in two folds. Next 3 to 5 years, if you look at it, how do you envision the NBFI sector, the fintech to evolve in Sri Lanka?
So if I look at the NBFI sector itself, I would say we will see further consolidation because the capital requirements will also progressively increase. I think the regulatory roadmap anyhow envisages that, and you will see consolidation happening. Hopefully, you will see more and more of the smaller players playing a lesser focus on the conventional lending and deposit mobilization. And I hope that at least some of them will focus on creating platformization, so that they create a platform for anybody else to come and collaborate and make money through the platform itself,
Facilitation,
rather than facilitation,
right,
which I think is equally important.
Absolutely.
Right? So that's one thing I see, a critical enabler I see. The second area is there is still further work to be done in terms of true financial inclusivity in terms of the last mile.
Yeah.
And that is where I think the NBFI sector, where you have smaller balance sheets in relation to the banking sector, can certainly play that inclusive role and get closer as possible to the last mile.
Absolutely.
Secondly, in terms of the fintech roadmap itself, I don't think the Sri Lanka itself will confine the dare to dream of fintechs. The way I see fintechs, including the one which I helped to co-found a few years ago, I think they will use this 22 million population as really the validating an MVP, a minimum viability product.
Yeah.
And
out.
most of these businesses are not B2C.
Okay.
They're actually B2B type fintech companies.
Okay.
So when you have a B2B operation and you validate an issue in Sri Lanka, I think then you are able to scale it out. I mean, if I give a simple example, the way I would like to see some of these fintechs is look at this Barcelona example.
Yeah.
You learn from Sri Lanka, then you go to the world.
Out, yeah.
And that's how I see some
fantastic.
of the fintechs also, to have the courage to learn from what you're doing locally and go out.
Okay. As an inspiration to our followers who would want to get into this space, I'm sure there are plenty of ideas. Sri Lanka is not short of ideas. I'm sure you would have seen at the Startup Nation very recently concluded how fantastic those ideas are. 3 pieces of advice if you'd like to give who's inspired to come into this space.
I think the first is this is not a short-term game.
Right.
You need to be there for the long haul. Second is don't get put off by failure. Very many people, when they come to these startup issues, they talk about success, but very few talk about how they have failed and what they have learned from failure. To me, FAIL is a first attempt in learning. So that's a very important second point, I would say. And the third thing, third bit of advice for any startup person is, okay, when you incubate an idea, you're at a particular journey. But once you crack through that and you get in to start to earn revenue, you start to attract a different quality of capital. When you start to attract that quality of capital, as an investor, you need to really, as a entrepreneur, you need to really start to think, at some point, how are you going to be accountable to give a fair return in terms of an exit? How would you actually eventually help these guys to go out satisfied?
Yeah.
And in that conversation, that is actually phase 2, a very important and a difficult decision, very many people find it difficult to grapple, is startup creativity challenge and hunger. On the other hand, once you get to that stabilization level, it's governance, management.
Absolutely.
So how do you balance those two? And I think the best thing is, if you are not good at the latter at the right time, let go and let somebody else take the ball.
And run. I think that's an interesting phenomenon, Mr. Theagarajah. I have seen many cases, even in the case of Walt Disney. He was the creative entrepreneur and the brother was the more controlling, financial controller. You need to have the right balance.
Absolutely.
If not, some of these ideas will not prosper in the right direction. I'm going to drag you into the brand which is closer to our heart, First Capital Holdings, who's doing a phenomenal job in terms of expanding the investment banking part of it. And one of the challenges we see from our perspective is the financial literacy in Sri Lanka, which is below 60% right now, compared to our literacy level being at 92% or somewhere. Do you think that the Sri Lankan corporates are doing enough? And if not, what should we be doing? Because people need to be educated. We move out from Colombo or maybe the 2 to 3% population that we know as socioeconomic class A, B. But the other class, other sectors do not know the potential tools which are available, how best you can navigate through the system. Do you think the corporates are doing enough? If not, what should they be doing?
Corporate Sri Lanka itself, I think, is doing its part, but the question is it enough? I think what will drive the question of enough will not necessarily be internal, it will be driven by investor sentiment eventually. And if you really see what is now facing us, two things: climate action as well as this whole thing about circular economy. And there is so much of pressure and expectation from a different quality of investor group, whether it is investing in the company you mentioned or investing in its product suite, asking, expecting sustainability in offering. And I think sustainability is very, very closely and directly linked to what you speak in terms of financial literacy. So in my opinion, eventually that expectation by the investor sentiment itself, I think will drive corporates to really relook at their strategy.
Absolutely.
And seeing how further can they look below, not just look at a single bottom line, but to really look at what we call triple.
Absolutely. I think, in my personal opinion also, if, especially from the First Capital point of view, if we take that leadership in terms of creating the industry and, driving it for the others, also we are creating opportunity for all other the financial sector institutions also to benefit, and Sri Lanka ended.
And I think FCH, the group itself, has, I think, demonstrated that quite aptly in the past, I think, decade or so, in not being afraid to take the lead.
Absolutely.
And I think I'm sure the management team will continue to forge ahead with that same sentiment and hopefully lead the way.
Absolutely. Mr. Theagarajah, unfortunately, the time is against me. So I had few more other questions to drill you in terms of your knowledge on the financial sector, Sri Lanka as well as globally. I couldn't even go into the global sector. We were talking about Sri Lanka. But thank you very much for accepting our invitation and spending time with us. I wish you all the very best with all the ventures that you're in and the leadership that you continue to give our organization as well. And thank you very much for joining us.
Thank you very much for having me here. Really enjoyed the last half an hour, Gamika.
Thank you, sir.
Pleasure.
So that's a wrap, folks, for today. Very interesting conversation about financial sector, financial markets, fintech. I learned a lot. We did a lot of research before coming into this conversation, and certain points were challenged, and he gave a very blunt point of view of how things should be looked at. Two things stood in my mind. It's about managing your resources. If you're given a challenge, you are looking at the outcome and you're given set of people. You hire the best people better than you. That's not definitely a challenge. And when you manage your input, let the operation take care of itself, and the outcome would be as success as you want it to be. So management of people becomes a key in leadership in any industry. And finally, failure, first attempt in learning. That's something that all of us can be inspired. Start your journey today. Be bold, be brave, and break barriers to create your own future. Until we see you again, thank you very much. Gamika Dilva signing off.